This CPI is probably going to be more important for the markets than for the Fed, in that the Fed has already told us that they're likely to leave rates unchanged. But this will set the expectations for what happens in 2024. Everyone expects it to go down. The Cleveland Fed puts out a CPI nowcast that is pretty accurate. It predicts what's going to happen with a remarkable degree of fidelity, and they're saying we're going to go down to a 3% rate, which is definitely in the ballpark of what the Fed is looking for, not quite there yet. And then overall, slow progress on the core, but some progress, down to 4% is the forecast. You look at what the Fed forecast back in September, and right now the economy is performing better in every category than they had forecast. So coming out of this, there's going to be some adjustments to what markets think the Fed is going to say about 2024, probably more than anything else.
I saw this great stat from Bloomberg Economics that in the U.S., the 48 lower states, there were 19 days in November that were warmer than the 30-year history. So it was unseasonably warm. You wouldn't know it by being in these studios because I am freezing right now, besides the point. How much of the headline figure is just going to be down to that, to warmer weather, to lower gasoline prices?
Well, lower gasoline prices are going to make a big difference. They're going to take a lot off the top of CPI, off of headline. It also may affect industrial production because people may not have needed to use heaters and definitely not using air conditioners. And then people do tend to go out and shop when the weather's better, so it may help retail sales. We're not sure whether retail sales, which we get on Thursday, is going to continue rising. But if prices keep going down, that should make Americans feel better about getting out and spending some money.